All right, ladies and gentlemen, welcome back to the Garden State Growth Show. Super excited for our next guest. Today we have Raj, the best dressed man in Montgomery. He's a local entrepreneur I've gotten to know well over the last 5 years, and I'm excited to have him on the show. Raj, welcome.
Thank you for having me, Jan. It's my pleasure to be here.
Awesome. First of all, who is your stylist? Is this all you?
Well, it is all me, but I have to tell you that I was inspired by my three sisters growing up.
Yes.
Having two older sisters and always looking up to them, and
Yeah.
they were.
Are they in fashion?
No, but I used to dress like a girl growing up.
Really?
Yeah, because we had the hand-me-downs, right?
Oh, yeah,
The oldest, I come from a very modest,
Yeah.
So the oldest sister would get it,
Mm.
then the second one, then the third one, and then me.
Raj.
And it was all pastel colors, and
Yeah.
so yeah, that's what kind of.
I personally love it. I feel like I'm on vacation every time I see you.
Yeah, I feel like I'm on vacation every day.
It's a conversation starter.
Yeah, it is.
I'm sure people stop you and
Yeah.
say it's
It's a lot of
sick
fun.
pants.
Yeah, they're like, "Oh, you going to play golf?" I'm like, "Nope, this is just the way I dress."
1920s golf.
Yeah.
So you have a long history, a job history. What was your first job ever or out of high school that you can remember?
Well, the first purposeful job I had was I was a freshman engineering student,
Mm-hmm.
and at Rutgers, and I answered one of those ads that said unlimited earning potential, make your own hours. And I said, "Wow, this sounds great. I can make as much as I want."
You're a
and
college student at this point.
Yeah, I was 18 years old,
Okay.
and it was a mortgage sales job
Right.
as a mortgage loan officer. So that was really up until that point. I always thought I was going to be an engineer. My father was an
Really?
engineer, my uncle was an engineer, and they were very accomplished scholars.
Right.
Very educated. And so and around that same time, I think it was the second semester, I took an economics course, and I didn't even know up until that point what economics was. And then my third semester, my sophomore year, first semester, I took accounting,
Okay.
and then I just knew.
Yeah.
And then I was doing loan officers. I was doing very well there, because I think people that are successful
Mm-hmm.
in any walk of life, they're passionate about what they do.
Right.
You know what I'm saying?
Yeah.
Like if you look at top real estate agents,
Yeah.
they love real estate.
Right.
They're like really passionate about it,
Yeah.
So, so I think I found something that I was passionate about, and that
So initially
was my
that
first-
was sales.
that was
right.
that was.
You told me a story once where I think you're going door to door in apartments, right? Asking people,
Yeah.
hey, if you can buy something for the same monthly payment, or would you be
Exactly.
interested?
Exactly. So, I used to work for a company called Vision Mortgage,
Mhm.
and they were located on Howes Lane in North Brunswick.
Right.
And my territory was Hudson County. So I used to go
It's a big territory.
yeah, and I used to go from Bush Campus in Piscataway to Hudson County,
Wow.
and it was very competitive, right?
Right.
And back then it was a very different environment.
What year are we talking about right now?
1983.
Wow.
Yeah, long time ago. So
What were the interest rates back then? Like
well,
16%.
60, yeah, exactly. I actually my first property I bought was 16.1%.
Wow.
As that was a 1-year adjustable,
Jeez.
Yeah. So, but the mortgage banking industry was not developed. 99% of the loans were done by the local community bank. There was no such thing as interstate banking. You know.
Yeah.
So mortgage banking was in its infancy. So I would show up with rate sheets to real estate offices, and nobody would give me a deal.
Right.
So I said, well, listen, what am I going to do? So let me go directly to the consumer. And that's when I started knocking on doors and saying, hey, did you know that you can own a house where your mortgage payment's going to be similar or less than your rent?
Because this is before mortgage calculators on Zillow.
Oh, no.
Nobody knew anything.
No,
right?
there was no internet.
Yeah.
There were no cell phones.
Yeah.
There were no cell phones. We used to have beepers.
Oh my
Like
God.
the customer would call us, page us on a beeper, and we would stop on a phone and call on a phone
Oh my God.
using quarters and all that stuff. And so it was a totally different world.
Well, how was underwriting done back then?
It was all a manual process.
Wow.
It was all a manual process. There was no such thing as credit scoring. There was no such thing as automated underwriting. All that stuff came later in the mid 90s.
So people just drop a manila folder off with their pay stubs and tax returns, basically?
Yeah. We used to, typically on a Saturday and Sunday, I would go in there with loan application packages,
Wow.
and I would take it by hand. There was no computers.
Yeah, it's no Excel. So you're like handwriting everything.
We used to have scientific calculators,
Oh my
HP, Hewlett Packard, and Texas Instruments. Those were the
Wow.
two big ones. Yeah, that used to make these scientific, where you can calculate, what the payment is based upon the different variables.
Was there pre-approvals back then that agents were using with offers, or was it just like we'll figure
No,
that out later?
no, yeah, I don't think there was that process. They would
Wow.
call us and they say, "Hey, listen, we have somebody that's putting 20% down, 25% down, and can you take the loan application?"
Yeah.
And there was no automated process for pulling the credit, so we would have to first get the authorization, have it hand signed, and then I'd bring it back to the office in North Brunswick, and then
Wow.
the processor would pull the credit report.
Talk about learning the business from the ground up.
Oh yeah, yeah. It was a
It's like
totally different.
pre-computer mortgages.
Yes.
That's
yes,
wild.
Yeah.
And so how long did you do that for? What was your next job after that?
After Vision, I started my own mortgage company in 1987, 86, somewhere around there.
How old were you then?
I was 21, 22.
Wow.
Yeah. So,
Were you even out of college?
no, I was still in college at the time.
Oh my God.
Yeah. So, but at that point, I knew I wasn't going to be an engineer. I was just
Yeah.
going through the motions. I was always a really good student. I enjoyed studying, but I couldn't see myself,
Right.
because I was around engineering all the time. Like my dad would bring the drawings and he showed
Yeah.
me stuff like that. But once you have that taste,
So how did the light bulb go off? Like, I can do this on my own. What gave you that confidence or even knowledge to do that?
I think that I had a great mentor, Richard Rosenberg, the guy that owned Vision Mortgage. And I said to him, Mr. Rosenberg, I want to start my own company. He was very upset about it initially.
Yeah.
But then, a couple days later, he says, Raj, I can't give you the same opportunity that you really deserve, So he was a person of vision,
Right.
like Vision Mortgage. But anyway, so he actually even helped me,
Really?
on he gave me his blessings. And
So were you like a wholesale broker? Like
at that point we were lenders. So we had
direct lenders?
we had a $250,000 net worth, and we had a net worth, and then we had a line of credit that we used to use to close loans with. And then
Wow.
once we closed a certain amount of loans based upon the coupon or the interest rate, maturity, weighted average maturity, so WAC and WAM they call it. So based upon those things, we would sell them, package them, and we would sell them to different investors, lenders, institutional
What was your average
investors.
like loan size in the 80s? Like
It was-
20 grand?
No, it was definitely less than 100,000.
Wow.
Yeah, it was definitely less than that.
So although high interest rates definitely lower home prices.
Yeah, I mean,
Condos.
60,000. Jersey City was really changing at that point.
Mm.
So Hudson County's Jersey City. You have Bayonne, North Bergen, Union City, North Bergen.
Man, imagine you bought properties.
Weehawken.
in the
Yeah,
80s
oh,
in
yeah.
Hoboken
Oh,
and
yeah.
Jersey City.
I mean, you could buy them for
Those were
nothing.
dumps back then, right?
Absolutely. The whole Jersey City was a dump,
Yeah.
But people that had vision that bought back then and held on to it,
That's the key.
I bought back then, but I sold too. I
Mm.
should have, I wish I would have kept it,
Yeah.
So, but yeah, it was a great place to learn, and it was a great time to be in the industry, because the mortgage industry was just the concept of collateral where you can do mortgage-backed securities,
Mm.
right? It was just coming out.
Yeah.
Before that, a loan officer was usually an officer of the bank.
Right.
They were like the the president of the bank,
Yeah.
the vice president, because
Yeah.
there were small. Community banking was very different back then.
Right.
It was truly community banking.
Right.
And so when the secondary market developed and you could make money up front, that's when the concept of a loan officer actually came out, where you had more and more people getting into the industry.
Like a loan, is that when loan origination started?
That's when loan origination, where you could make money up front based upon the net present value, right, of the loan that you're originating and what you can make in the secondary market. Because see, before that, if a bank is making a loan, the only time they make money is either upfront in points, which was unusual, or every month when a payment was made, right? There was no upfront fee. But once the secondary market came out and when it became more popular, lenders started making 4, 5, 6 points up front.
Wow.
Right? So that's when they started saying, okay, I'll give 1 point to the loan officer and I'll keep 5. You know what I'm saying? That's when the secondary market.
When did the 30-year mortgage come out?
Oh, I don't know exactly when. It had
in the 90s?
No, it was before then.
Okay,
it was before then.
Did you notice an uptick once that came out? Suddenly.
No, 30-year mortgages have been around a long time.
Yeah. Oh, okay. I thought that was recent.
Yeah. No. Because I remember, if I'm not mistaken, back in the 60s, my dad got a 30-year mortgage.
Okay.
In the late 60s, and I think it was an FHA.
Gotcha.
Yeah.
So what happened with that company? Did you get more employees? Did you exit that? How long were you in? What was the name of your company?
Atlas.
Atlas.
It was called Atlas. And Atlas, we were around for about 3 years, and we ended up, it was, back then the dynamics were very different, Jan. It was easy to, do things like, get investors. It was easy to, we had gotten our application approved for a thrift, right? To become a bank, right?
Oh,
yeah. So
you do your own wire. What's a thrift? Is that
it's like it's a type of bank.
Oh, okay.
Yeah, like a savings bank.
Okay.
Yeah. So and then we sold. I had a couple of partners.
Yeah.
And so we sold, and then I went into technology.
Totally different.
Yeah. So while I was in mortgages, because I still haven't, at that point, I still have a technical background, right?
Yeah.
I learned a scientific programming language growing up.
Basic?
No, Fortran.
Oh, okay.
Yeah, it is scientific. So I learned that, and so there's things that I saw that I felt could be automated. Right. And
repetitive tasks.
And I really enjoyed the challenge of automating things, you know, from a very young age. So that's when I got into technology, and we really did some really cool stuff. The concept of introducing credit scoring to the underwriting process.
Yeah.
I did that. And then we had the whole idea of how to do automated underwriting, right? So we designed and developed some really, really cool systems.
Was credit scores come out before the internet?
The concept of credit scoring came out in the 50s.
What?
The concept of credit scoring came out in the 50s. But, there was no way of
tracking it.
There was no, it wasn't, there was no automated process for it.
Right.
It was a manual process because there was no computers back in the 50s, right? There was no PCs. So then it started getting more, they started using it in the auto industry.
Okay.
Where you go to the dealer pulls your credit and there's a score there, right?
Right.
And it's a really long story about how Fannie Mae and we collaborated on how to on why, because initially they said to me, listen, we see a pattern of discrimination. Okay. And I said, listen, the income is the income. There's no discrimination in there. The appraisal is the appraisal. The underwriter's not making a decision there. The only place where there could be something is on the credit report. So the underwriters didn't know that, Fannie Mae saw a pattern between, certain ethnic groups,
Yeah.
certain age groups, genders. They saw a pattern.
Not getting approved.
Yeah, they saw a higher rate of.
Okay.
So the only thing that there was any type of subject interpretation, was the credit report.
Right.
That's how I came up with, hey, listen, let's bring in credit scoring. And so we initially started writing our own scoring algorithms, and then we started talking. Back then it was TRW. Experian was called TRW, TransUnion and Equifax, and we started talking and collaborating. We had steering groups with different lenders, but yeah, that's how we.
This is the 90s at this point?
This is around 94, 95.
And what was the name of that company?
ACS.
Okay.
American Computer Solutions.
And then when did you get out of that?
2001.
That was an exit?
Well, that's also a long
Sold?
story. I think what happened was that I really I enjoyed what I was doing, but I was getting burnt out. 92, my daughter was born. 97, my son was born. When my son was born, that's when it really hit.
2 kids will do it.
Well, I wasn't spending any time with them.
Yeah.
I wanted to be, I had a great childhood. My parents loved me, and it was just a great time for me. And I wanted to do whatever I can for my kids, So it started cooking in my head that, I don't know if I want to do this anymore. And then in the Y2K thing came out.
Yeah.
The year two, the whole world was going to explode, right? So we weren't able to, like, a lot of the banks that were using our software systems were questioning on whether it was going to work or not.
Thinking a virus is going to come out or something.
Yeah, because back then, because we provided all kinds of warranties, and then when all that started happening, I just started saying to myself, I don't know if I want to do this anymore.
Yeah.
And I think I just want to. But I had my title business. I had a credit reporting company.
You started title while you were doing
1995.
Okay.
Yeah, 1995. And the credit reporting business started in 1992, around the same time that I did the
What motivated you to start the title company? Did you just see an opportunity, or
we had over 3,000 lenders that were using us for credit reports.
Oh.
Okay, we had over 3,000 lenders across the country.
Nationwide?
We were the largest, right? And so I said to myself, what else can I sell these people?
Ancillary service.
Yeah. What else can I sell these people?
Because you have the relationship.
Yeah.
The lead flow.
Yeah, and then plus you and then once we came out with technology, I mean, some of the stuff that we did, I mean, I look at it today and compare it to what is available today.
Yeah.
We still, nobody comes close to us.
Yeah.
The stuff that we created,
That's awesome.
Yeah. So that was really the funnest. I mean, professionally, that was probably the funnest time of my life.
Yeah.
And also the time that I made the most money.
95 to 2001?
I would say from 93, 92 to 1999, around that time, 6 years.
I mean, computers where performance was doubling, tripling every year.
Oh, yeah. Yeah.
Like,
I mean, it was just a whole.
Went from Atari to the internet in 5 years.
In a very small period of time. When the internet came, that was the explosion, on what can be done with it.
I was around that time. I was in a family business. Well, my dad started the Max Flight, which is virtual reality simulators, flight and roller coaster simulators, in 1994. So
wow.
I watched all that stuff happen from 94 to 2000, where graphics on the computer, you could fly airplanes, and he put a computer on a simulator, like one of the first people to do that. And so I was like test driving that stuff when I was 8 years old. I grew up on computers. Like a lot of kids, in the early 90s didn't have a computer, but like we had it, and we learned how to like network them together just because my dad was in that business.
Mm-hmm.
So, that was always kind of a fond memory, getting that kind of foundation.
Yeah, I see, that you gravitate a lot towards innovative things, using technology a little bit different, and sometimes
It's
that
fun.
little bit of difference,
Yeah.
of course. And if it's not fun, then there's, you know,
Why do it?
yeah, yeah.
I guess if you could go back, would you change anything from, that early part of your career? Would you do anything different? Your 20s and 30s?
I think, I just, you know, I didn't have the experience of entrepreneurship,
Right.
you know.
Wasn't even like
I
a
I,
thing.
I was so young. All I
Yeah.
cared about was, partying and,
Yeah.
and hanging out. And, I didn't really, you know, my entrepreneurial journey really didn't start until like up until like 2001. That's when I really started thinking about, you know business strategy and,
Right.
stuff like that. And, started, instead of, up until then it was just like, all right, wake up in the morning, what's going on today, you know
Yeah.
so, but that's when really started planning and
Right.
becoming more responsible. So I think I just was young
Yeah.
and very ignorant
Right.
about, and success came early to me,
Yeah.
for me, and I didn't really appreciate it,
Right.
the way that, now, now that there's less time, less miles ahead, as
Yeah.
there are more in back. You kind of think back that, I wish I would have done with the technology. I really could have done some special things with it.
Right.
If I would have known about what I know now about capital markets. And, you know back then private equity was very different. But,
Yeah.
certainly, there was a lot of opportunities that I wish that I knew then what I know now.
What did you do after the software uh, exit, or
Well,
what was next?
I
Was it real
really
estate?
I hung out with the kids a lot.
Okay. Just took
And
a couple years off.
I think I just took it very easy.
Yeah.
I still had the credit reporting company, I had the title company.
And you're
uh,
living in Montgomery at this point?
at this point I'm living in Montgomery.
Okay.
And so I think I was just really burned out from software. And, because it was traveling, it was because, I did a lot of the sales, and
Did your India office exist yet?
95,
Oh, you started that back
96.
then.
Yeah, yeah. But they weren't technology supported back then. They
Oh.
were more just, data entry. There was no internet. So
How are they helping you if there's no internet?
we had
Like
leased
faxing you?
lines. We had leased lines.
What is that?
That's where you have a physical cable that goes,
What?
and yeah, it goes, you know, and then radio frequency.
Oh.
Data was transmitted by radio frequency.
Would it print out on your side like a fax machine?
No, it was just like it was like the internet,
Hmm.
but it was, dedicated lines, private networks,
Oh,
you know.
okay.
So, very expensive, like
Yeah.
ridiculously expensive. But, it wasn't the whole India office started. It was just more of a, I had friends, and, we had family that weren't as, fortunate as
Right.
we were, right? So I just thought it would be a great way to give back,
Oh,
and that's how it started. And now it's become,
yeah.
the backbone of our business.
Yeah. That was you were ahead of your time. you know.
Yeah, yeah. I mean, listen, it's all about innovation, right? I mean, things, sometimes you plan for things, but then they just organically evolve
Mm-hmm.
to, they just become what it becomes.
Right.
And I think that's what happens. That's what's happened my whole career. I've just kind of been like stumbling into things, bumping into things.
Comes from just being curious, right?
Yeah, yeah,
Always being curious about, hey, could we do this a little different? Could I make this faster or better or easier? Automate it, right?
yeah, yeah,
So
exactly.
when did you get into real estate?
Well, I mean, I've always looked at, real estate as I don't look at mortgages and title and real estate brokerage as separate. I've
Okay.
always thought of them as the same.
The real estate business.
Yeah,
Yeah.
yeah. I've always thought of them as the same. So, And then I started investing at a young age, buying and selling properties,
Mhm.
fixing and flipping. Um, and then I did some rentals, I did a couple condo conversions
Right.
in Jersey City. That's where you buy like an apartment complex and convert them to condominiums.
Oh, wow.
That was a big thing back then.
Does that
So
still happen today?
oh yeah,
Yeah.
you can do condo conversions. I mean, they're hard to find because there's no more apartment buildings left.
Right.
So a lot of that has been done already. But yeah, so I always thought of them as being the same. Now I didn't have the knowledge about title. I mean, I knew mortgages and I knew real estate, but title I learned in the '90s, in the mid
Mhm.
'90s. And but yeah, I think I've been about 40 years now, over
Wow.
40 years in real estate.
Did you back then doing title, did you have to go to Somerset County like
Yeah,
to get surveys? Like
yeah.
Somerset County Courthouse or
Yeah,
wherever there's
the
store?
deeds and the mortgage notes, all the recording. You had to physically walk in, and there was no databases.
Oh my god.
There was no databases. There was no the 13 original colonies. I mean, back in the '80s and '90s, there was no automation.
So
You
what
know.
did you just make photocopies there and
Yep.
then bring it to
Yep.
the closing?
Yep.
Wow.
We would make photocopies. Um, yeah, there was no automation. That all came pretty recently. If you look at it as a big picture.
Yeah.
Um, yeah, there's been a lot of and the newer states, like Hawaii and California, they're much more ahead of us.
Really?
Yeah,
With
with their
title?
with their data, with their court data,
Right.
because our title is all, we're looking at, the data that comes from the municipal court, the county court, and the superior court,
Mm.
Trenton. Right, those are the three courts we look at. So they started that process. They said, okay, listen, whatever is behind us, we're not, we're just going to focus on whatever we're doing now. We're going to start having a digital system for, and then we'll start going back,
Right.
with the most recent year, and then we'll build back. And that's what happened. And now all the courts in New Jersey are pretty much automated.
Wow.
Yeah.
Do, what do you think is next, with AI and everything for title? Seems like title's due for a major overhaul with technology. Like maybe we can use smart contracts, instead of title, right?
Yeah, there's going to be some changes, but there's always going to be a need for the title to be evaluated and
Verified.
verified. Number one. Number two, there's fraud is still a big problem.
Right.
Fraud is still a very big problem.
Last thing you want is a hacker to go in there and take your deed or put their name on the deed, right?
Listen, I had a case yesterday where one of our associates, she was representing on a land deal in Camden County. She never met the seller,
Mm-hmm.
and the seller was in South Carolina. And I said, and the seller had an attorney, but the attorney nobody ever met the seller,
Oh no.
and it's land.
Yeah.
So there's
So
no
why would
property
you?
go.
Yeah.
There's
Yeah.
no property to go into, or right. You just
Right.
say, I own this property," and the agent said, "Yeah, I verified that this person owns the property." But I said, "Did you verify the person is who they're saying they are?" I
Right.
mean, there's a lot of this stuff going on, and I think that's probably the biggest issue, which
Mm.
fraud is the number one losses that we have in title is fraud.
Wow.
Even today. So that's not going to go away, right?
Yeah, I guess that would. You almost want to keep it a little more personal or keep humans in the loop longer with fraud being out there. It can't just be all automated.
And the function of escrow, right? So what
Right.
happens in an escrow, right? Escrow is where the the bank sends us the documents, they send us the money, they send us the instructions, right? We create everything, and then we tell the buyer, hey, listen, we're holding this in escrow.
Mm-hmm.
There's a that escrow function, I think, is really important.
That's true too.
That's a very important. So it could change where you know, there's because everybody wants to do things for the need for speed,
Yeah.
but there's also that component of making sure that there's no fraud going on, and then the settlement. Somebody has to serve as an agent.
Is fraud, like wire fraud, is that on the rise, or is that
Oh,
getting
big
worse?
time, big time,
Wow.
big time. It's scary, Jan. It's so scary. I mean,
You're getting so good at spoofing.
yeah. I mean, we had an attorney. I mean, we in the last week we've had two transactions where attorneys sent us the wrong wire instructions.
Oh my God.
Yeah, and
Did he actually send them? Or was it a clone of his email?
well, right now we're in the process of investigation of all that. Because
Was the money sent?
in one case the money was sent, and the other case we caught it.
Good.
But that's pretty a tough one, because if the attorney sends you a payoff, and you call the attorney, you say, "Hey, listen, is this the payoff?" And the attorney says, "Yes, it is the payoff."
Oh man.
Then what do you do?
So someone, the hacker or whatever, sent him something that got forwarded to you. Oh, that looked like
That's
it
what
was
I think
from the
happened.
client or something. Wow.
It could have been from the client.
Oh my God.
I mean, so yeah, it's really scary. It's really scary. A lot of companies, like title agencies, real estate brokerages, they don't have cyber insurance.
Mm. Oh, so, oh no.
Yeah,
So the title company has to pay that?
well, I have so much insurance.
Yeah.
You know what I'm saying?
Yeah,
I mean,
yeah.
I am like, I mean, I can't because we're not a small,
Yeah.
we're a pretty large title agency now, right?
Yeah.
So I can't afford
Right.
to not have it. But you go to some of these other places and they're like 27,000 for cybersecurity. They're like, I'm not paying that. I'll make sure that the wires are sent the right way. I said, no, man, I can't. Because when there is a claim, the first thing everybody does is, I'm not paying, right? They all start getting defensive that he did it, and we have to worry about the client.
Right.
The most important thing is
It's
making
their money.
sure it's their money. We have a moral and ethical responsibility.
Right.
That, and it's our obligation
A
to.
lot of times it's their whole life savings in the house.
Yeah.
Yeah. All that equity over the last 20 years,
Yeah.
like could be $1 million.
Yeah. Yeah. So I don't think we're taking it seriously enough, because the number of and a day doesn't go by where every day I get a minimum of five things that I have to look at really closely to see, So one thing that we're going to do as a result of these couple of transactions we had, we're going to outsource anything that has to do with the wire.
Oh, that's good.
Yeah. So we're still going to have the insurance. We're still going to have everything, but we're going to have another company, another layer.
Yeah, like the client logs in, verifies their identity.
It's just, and this is all they do. This is
Only
all
wire
they do.
security.
They just identity and wire. Those are the two things that they do.
That's a good idea.
So yeah. So, I mean, it's gonna cost us a little bit of money, but it's okay. It's okay. I mean, I think, but what is really scary is that title agencies and mortgage companies and real estate brokerages that don't have any of this.
Right.
You know what I'm saying?
Yeah. A lot of them are using just emails and.
Yeah, and attorneys. Attorneys are, from what I've seen, a lot of the problems are coming from them, because they don't understand. They're attorneys. They're good at what they do, but they don't understand technology.
Right.
And you need to have. You can't, if you've got your own domain, you got to make sure that it's hosted by, a good company.
Yeah.
You know what I'm saying? You can't just have it through some, your local computer guy that is a relative or a high school buddy.
Right.
You know what I'm saying?
Yeah.
I mean, it's critical. It's really critical. So, I think title insurance. Listen, in business, everything has always evolved, right? Everything has always evolved, but I think things will change, and we just have to be versatile enough that we can pivot.
Let's talk about title insurance for a second,
Sure.
because that's usually an option that we get questions about from our clients when they're buying a house. How long does that title insurance protect them? Is that until they sell again or just for the transaction?
So that's a great question, Jan, because title insurance is one of the only insurances that is for an event that has taken place in the past.
Mm,
When you buy homeowners insurance or life insurance or auto insurance, it's for something that's going to happen in the future,
okay.
right? For title insurance, you're not insuring for something that happens in the future. It's for an event that happened when you closed on the property, when you took ownership. You are ensuring that from the beginning of time that nobody is going to make a claim.
What if they do make a claim? The title insurance pays them
Yes.
money?
Yes.
Oh my God. That's
But
the best money you could ever spend. It's title
yeah.
insurance.
Yeah, yeah. It's one of those things that there aren't a lot of claims, but it's something you have to have.
Yeah.
I mean, I really think it's worth it. And again, the fact that they are the settlement agent, that adds a lot of value to the transaction.
The insurance company is also the settlement.
Well, the title agency is.
Okay.
Yeah.
Gotcha.
So the title agency, just like you have State Farm agents and you have Allstate agents.
Yeah.
We represent a company. We're an agent for a company called Fidelity,
Okay.
and in New York Security Title. So we're representing them as their agent, and in order to do the title insurance and make sure that there's no problem with settlement, because we're dispersing funds, we're making sure all the mortgages are paid off, making sure that the deed is recorded properly, and all those things. And that's the most important thing of the settlement agent,
It's true.
making sure all that stuff gets done.
Are you allowed to be a settlement agent and also a real estate agent?
Yeah.
Just can't settle your own transaction, I'm guessing.
With disclosure,
Maybe you could.
you can, as long as you're disclosing it to the client. You can be the settlement agent.
So
It's all about disclosure.
yeah. So like, just as a part-time job idea for agents that are slow, could
Mhm.
they be a settlement agent on the side?
Yeah, yeah. Well, a lot of the settlement agents out there are, you have to have a notary, get a
Okay.
notary, and you can run around, make a couple $100 per closing.
Is that how much it is? Like $300 to
That's what
$500 or something?
200, 150 to 200 is usually what the notary gets at
Oh,
closing.
okay. So, closings are about an hour, hour and a half. So you
Yeah.
can do a couple a day if you wanted to.
There are people that do that all they do is closings. They're really good at it, and
Yeah.
we have closers. I mean, we have a guy named John Nodzak. John's been with me since 1996.
Wow.
Yeah, he's great.
Yeah.
And all he does is do closings. And so yeah, I mean, if you're good, just like in any other field, you build a following of people that want to refer you business.
For you attorneys and title companies.
Right.
Gotcha.
Right.
So let's fast forward a little bit to your latest venture, Visionary Abstract, which, full disclosure, I'm a
Stockholder.
shareholder.
Yeah. Yep.
Yep, I'm a shareholder. This started in 2021, Visionary?
Yeah, roughly 2021.
2020.
Yeah.
Tell me about it. Like, how did this idea come up? Where is it at now?
Yeah. So, when I was in title insurance and then my wife was in mortgages, we got into real estate and I bought a Keller Williams franchise.
Right.
We're one of the oldest or longest tenured franchises in New Jersey.
Mm.
And the reason why we did that is because we were hoping it would feed our title business and our mortgage business.
Got it.
Right. In most cases, people are in real estate and then they start a mortgage company or title
Yeah.
company. I was kind of different. My path was different. Now, all of our agents knew that we were in the business, but we really didn't push it.
Yeah.
We didn't want to force them. I saw very quickly that if I did try to, it would
Turn people off.
It would very much so, and I didn't want that.
Yeah.
And plus, our business was so good in mortgage and title.
Yeah,
Without
yeah.
them, I really didn't care, but then um, our business started changing.
Hmm.
The real estate business started changing. When I first started, we had a cap of what an agent would pay us was like 32,000. Then it went to 28,000. Then it went to 24,000. Now it's at 16,000.
Yeah.
Right. So my expenses are the same.
Right.
Right. So I gotta start thinking about another way of doing things.
Yeah.
So, and title is like second nature. It's like muscle memory for me at this point in my life.
Yeah.
So, I said to our agents that, if I started this company, will you, if you can legally be compensated, will you participate? And they said, yeah.
Yeah.
So initially we had done it just for Keller Williams agents,
Hmm.
um, and then we had someone that left our company, and in our operating agreement, you had to be a Keller Williams agent.
Right.
So once you left, I had to buy you out.
Yeah.
So then, and of course, you know who that is.
Yeah. It might be me.
That's that's you, Jan Michael. So then I went and I got my operating agreement changed,
Yeah.
amended, right, so that we can allow people from other companies. Okay, and that's how this whole thing started. And there's nobody that can operate a title insurance business as efficiently as I can.
Wow.
There's nobody in the world. Okay, so let's say you want to open your own title company.
Yeah.
You have 20 real estate agent, top real agents, and you want to do it. The amount of money that I am paying my stockholders, you cannot make that much money.
Mm.
You cannot. I mean, you have expenses, right?
Yeah.
You have to have somebody, you have to pay a salary to do the work. You have,
Yeah.
you got insurance, you got all that stuff, right? You cannot operate a business. So this is a great opportunity for real estate agents. It's like you can profit as if you own your own company,
Right.
and then
Without going through the headache.
without going through the headache, and
And legally.
right.
There's needless to say, there's a lot of backroom deals going on. Obviously, they're not legal, with
That
title
yeah,
and
yeah,
mortgage and all that stuff.
yeah.
So this is a above water legal way to make money, referring title company.
Yeah, and the biggest, I think that when an agent refers somebody and they have control and they can call me or the Kara or support people, 24/7, it makes the transaction much smoother for the
Right.
client, right? And it also gives the agent more and more knowledge about the process,
Sure.
and I think it's been working out great. We've been growing. We're having a phenomenal year again this year, and and it's been fun. It's been
Yeah.
fun for me because at this point in my life, it's about the thrill of the kill,
Yeah.
right? It's there's like
It seems like in the last 12 months, the flywheel has started spinning.
yeah,
Almost like it's got its own inertia now, where
yeah,
it's not like
yeah.
you having to call a lot of agents. People are just starting to come to you now.
Yeah, it's gonna go viral at some point.
Right.
It's gonna go viral at some point, and I think I'm excited about it. I think mortgages. I mean, mortgages are, um, I think really the loan officer doesn't do anything other than bring in the deal,
Hmm.
right? Their job is not to process the loan. A lot of realtors think, "Oh my God, if I get my loan officer's license, then I got to process." There are certain things you have to do
Hmm.
to make it legal, right? You can't just get a license and give me
Yeah.
a lead and say, there's certain things you have to do, but they're not hard and they don't take a lot of time.
Right.
And in a transaction, when there's a problem, the processor is going to call the loan officer. The loan officer is going to call you,
Hmm.
and then you're going to solve the problem.
Hmm.
Now you have a direct link to the processor. The
Right.
loan officer is just their only job is to get the deal.
Yeah.
So if you're bringing the deal in, you're getting rid of that.
Hmm.
And to me, the real estate agent is the top of the food chain, and they haven't been treated that way.
Right.
They have not been treated that way. they should be maximizing their yield,
Right.
right?
Per transaction.
They should be maximizing their yield and also maximizing the efficiency,
Mhm.
right, of the transaction, right? Because the more efficient it is, the more happy client you have, which at the end of the day is the most important thing, right?
Yeah.
Their happiness, and then because that's a referral source in the future.
Now agents have the ability through your companies and like others like it where they can be like, hey, I'll take care of your mortgage, the real estate, and title all in one place.
Yeah.
And it is a lot more efficient and simple for the client where they don't have to have 3 emails, 3 phone numbers, and less mistakes, I would think too.
You know, when I bought my house here in Montgomery about 20 years ago, before that we were in Montgomery as well, but we moved to a different location. And the agent that I used, his name is Ken Lee. I said to Ken, I'm going to use everybody you tell me. I don't want the headache.
Yeah.
I mean, and I had been in the business, right? So, and that's what I did, and I did have a problem, and I called Ken. I said, Ken, you need to fix this,
Yeah.
because it was new construction. My rate lock expired, and the lender was giving me a hard time. And immediately he called them and he took care of it.
Yeah.
That's to me, I think that's a lot of value
Yeah.
that an agent has, in the whole process, right? Because what does an agent do? An agent is they have all the contacts, they have all of they know all the right people to call. They know that's part of their value proposition.
They
Right?
weed out the bad apples,
Oh yeah,
because
yeah,
we're going through 20, 30 transactions a year. We know who the good attorneys are, the good title companies, the good mortgage. You know who you're going to roll your eyes for if you see that
yeah,
lender on there. Like,
yeah. And same thing with an attorney. People don't realize how important a good attorney is.
exactly. Yeah.
You get an attorney that doesn't know real estate, or they have they're part of the legal plans where they get a discount from their office or whatever. I mean, those transactions are nightmares.
The attorneys are like the unsung heroes of real estate transactions. They're the reason why you either get through attorney review or don't. And if they're good, they help manage the transaction and the timeline. Like I work with Sonia and Drew Sumner a lot. They put out a cover sheet after you're under contract just to solidify all the dates things are due and all the points of contact. And I found that really helpful.
Yeah,
Just
they're
so,
great. We enjoy working with them a lot. They're really good people.
sometimes because sometimes dates change in attorney review.
Mhm.
So you need the closing date, when's the mortgage due, when's inspections due. All that stuff changes.
Yeah,
And people need to put that in their calendars.
yeah,
I know in New Jersey, a lot of closing dates are estimates, but it's good to have that information.
yeah, absolutely.
So, what's next for Visionary?
Well, I mean, I have my eyes on capital markets.
Mm-hmm.
So I've been doing a lot of research on companies that are in this space. Companies like what happened with Keller Williams.
Mm-hmm.
They brought in a private equity group. What happened with Redfin, and then historically, what did Remax do? What did Real do?
Mm-hmm.
What all these different their different paths, because the space is the same,
Yeah.
right? Whether you're Redfin or you're Real or you're Keller Williams, the space is Zillow.
Yeah.
It's all the same space, right? So like Zillow, they haven't really ever made they haven't made a net income, So it's funny how companies.
Is that true?
Yeah, look it up.
Oh my god.
I mean, if it's been, I mean, it hasn't been anything significant. They've lost money a lot more than they
Wow.
made money. Yeah, and look at them. I mean, they've got billions, and
Just because they have the eyeballs and the traffic, I guess
it's because
investors are giving them a long leash. I don't know.
Yeah. So really, what do we have to do? We need to be in more states.
Mm-hmm.
So we're licensed in New York now. We're licensed in Pennsylvania. We're starting to get deals in Pennsylvania. So we need to be, geographically, we need to be in of scale, and then we need more referral sources.
Right.
Right. So we need to have more people that are sending us deals. And then I think that in mortgages, I think that that's really going to be where the whole thing just like really goes. That's where the real opportunity is. And then I think there's other things that we can do. I mean, one of the beauties of a visionary is that all of our people, all of our stockholders are successful entrepreneurs,
Yeah.
right? They come across opportunities. They're smart people,
Mm-hmm.
and that to me is like a huge, think tank.
Yeah.
I mean, you've got all the like top people from different brands. It's brand
Yeah.
neutral, right? And you've got all the top people. Just think of the opportunities, right? And so I think that that's an area. I don't know if I can be a part of that, because I don't know if we're going to do something like that, like syndications, real
Yeah.
estate investments, like
Mm.
trusts and things like that. I mean, that's a whole different area. But I do think that cooperation amongst agents, because they see the opportunities, they have investors that are interested in investing.
Yeah.
Where they can, I mean, if we look at the profile of our stockholders, they all have people in their back pocket that are interested in
Yeah.
investing. And to me, there's no better investment in the world than real estate.
Right.
You know what I'm saying? There's no better investment in the world. The stock market, some people call it a Ponzi scheme, right? But real estate, doesn't matter what color you are, what political affiliation you are, what religion you are, where you live in the world, it's a phenomenal investment.
One idea I had for visionary is have you ever seen Revive or Curbio?
I think you had
It's a
mentioned that to me
platform
once.
where you can renovate now and pay later.
Yes, 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 yes,
And if
yes,
you think
yes.
about the market overall, the buyers are so condition sensitive right now because interest rates are high and they're busy and they got kids, and
Hmm.
there's no time to renovate,
Yeah, yeah,
or energy
yeah,
or money.
yeah, yeah.
They'd rather wrap it into the loan. They'd rather pay more for a house that's renovated than, even if it's a better deal. Like I deal with this all the time. Like I sell homes that need some work, but they're in great neighborhoods and they're selling at a discount, whereas homes that are renovated sell at a premium in the same neighborhoods. And the money makes sense to buy it low and renovate yourself, but still, especially in the luxury market, they'd rather pay for it to just be done.
Yeah.
So, and a lot of times sellers that I work with, they just don't want to do the work because they don't feel like selling stocks or converting things to cash and then doing all the stuff. But if they could pay at closing, that might reduce some friction and the house sells for more. Then the client wins, the agent wins, we win. Maybe there's a VIG, for that
Yeah.
convenience or 10-20%. And then, with that, Visionary does title and all that kind of stuff.
Yeah, I think that it's like a bridge loan.
Yeah.
Where whatever. I think that that's a great opportunity.
Mm-hmm.
And again, it comes down to having a real estate agent that you can trust.
Yeah.
Having an agent that you can trust, where the agent is a visionary,
Mm-hmm.
and they say that, okay, my client needs $100,000. We have an application process. We can do title, we can get AVMs, automated valuation, appraisals, and we can crank them out.
Yeah.
And that's another part of the value proposition that we can find. And it's great for the real estate agent, it's great for the home seller,
Mm-hmm.
and it's great for Visionary Mortgage, because we're making money on the interest, maybe a couple points up front.
Right. Cool.
So yeah, I think these are just creative ideas that.
Yeah.
The other thing is mortgages, Jan. I'll tell you, I don't understand the people that, like, if you're putting down 30%, 40%, the amount of documentation that they require
Yeah.
is the same whether you're putting 5% down or you're putting 30% down. It makes no sense to me.
Yeah. The risk is totally different.
I mean, yeah, exactly. You have somebody that has a history of saving,
Yeah.
or they have the financial wherewithal to come up with 30%.
Mm-hmm.
And so I think that there needs to be the box needs to change.
Yeah.
The way we do business, I really think that, because, investing in mortgages in America is one of the safest investments in the world.
Wow.
Yeah. I mean,
Jeez.
Fannie Mae by assets is one of the largest companies in the world. It is for you have what are the safe debt? You have the safest debt, the safest investment in the world is government securities, U.S. government securities,
Mhm.
right? T-bonds, T-bills, T-notes. Those are the safest investment in the world, right? And then after that, what's next? Mortgages.
Wow.
Mortgages have always performed. Fannie Mae has always performed. It's a safe investment. So I think that there's more opportunity there to provide better client service, and just by being a little bit innovative and thinking outside the box a little
Yeah,
bit.
and appraisals too. I think that's ripe for revolution, especially if you're putting 30-40% down. Like,
You don't
as
need
long
an
as you
appraisal.
verify the house is there, like, does it
Yeah,
really matter every inch of the
yeah, yeah.
garage?
And if you have somebody that's willing to pay that amount,
Yeah,
right?
isn't it worth that?
Yeah, I mean it's so I think that some of the and the these automated valuation methodologies, they've gotten really sophisticated now.
Hmm.
Like Fannie Mae has so much data.
Yeah,
They have so much data that from over the years of just closing loans, and then they tie into municipality systems just like Zillow does,
yeah.
right? So they tie into tax assessment, they tie into all those things, and so they have the data.
I had this idea. Don't steal it. An agent, let's say they're doing a tour with a buyer. Buyer's like, hey, yeah, we really like this. We're going to make an offer. Like, all right, I'm going to do a preliminary appraisal with my phone. I just walk around, take pictures, take measurements, and that gets sent to the underwriter or whoever.
Hmm.
And then it's like, oh, yeah, you can waive appraisal on this. We got, you verified dimensions and pictures.
Yeah,
And it went to some kind of appraisal waiver program. So now they can make an offer without that contingency that really is just a boogeyman and creates so much stress on the buyers and sellers.
oh
And it's
yeah,
usually not a problem.
yeah,
So
exactly.
imagine, just take that off the table.
Yeah,
We can make such better
absolutely,
offers.
absolutely. If they're putting that, if there's equity,
Yeah,
and even if there's not equity,
right.
okay, when you have PMI, the lender is getting insurance up to 20%.
Really? Oh, I didn't realize that.
Yeah. So what happens with FHA and with private mortgage insurance? Let's say somebody's putting less than 20% down. So the difference between 20% and their down payment,
Yeah.
that's what is being insured, right? So you're getting PMI anyway. I mean,
Yeah. What's the risk?
yeah. I mean, I think it's just become too, they're just become too strict, too stringent, and there needs to be some relax,
Yeah.
and make the whole process easier for everybody.
Especially as long as foreclosure rates are under a certain percentage, the rules should be a little more laxed if you have a certain amount of, credit score, income, certain markets. Obviously, some markets are more volatile, like Florida, than
Yeah,
here.
yeah.
But yeah, I think they should kind of have like smarter standards.
Yeah, I remember when we were looking at the credit score, and they wanted there to be a component for when we were scoring an income
Mm,
component. That okay, income should be part of the formula. What does this person make? And I said, does it matter? Like if somebody makes a lot of money and doesn't pay their bills,
right.
but somebody doesn't make a lot of money and does pay their bills, so it really should not matter. That should not matter. Money,
Yeah.
the amount of money somebody makes should not matter. There can be other factors, like amount of available credit lines. Of course, the best indicator of payment is what is somebody's history. Like
Yeah.
what have they done historically? Have they paid their
If
bills
you
on
listen
time?
to the Dave Ramsey show at all, you'll see that there's plenty of people who make a lot of money, but they are broke as hell.
Yeah, yeah.
Because they just buy big, cars, big houses, live beyond their means.
They're bad
They're some
financial
of the
managers.
poorest people in the
Yeah,
world, make six figures.
yeah, yeah, exactly. So I think that that's definitely something I'd like to do.
Yeah.
Is if we do start getting to the point where we can get institutional investors to invest in us in our mortgage securities, like if we can
Yeah.
get to the where we have our own warehouse lines of credit,
Yeah.
That's something that I have a really good understanding of, and I'm really excited. You know, again, I don't know. You know, at this point in my life, like I said, there's not. I don't know how much more time is left. You know,
Yeah.
because there's a lot of fun things still to. I mean,
Yeah.
there's a lot of growth that has to happen before we get to that point. But I can see visionary evolving. You know, and then once our stockholders see value and they see the benefit, then they then I think that they might be a little bit more enthusiastic about it. Because right now they're building equity,
Yeah.
right? They're building equity. They just don't know it,
Hmm.
right? So the value of the company when it increases, right, which is a multiplier of what our income is, what they're going to make when we if we do sell,
Yeah.
you know. Right now, I can promise that we have a very strong earnings record. We're paying dividends every year, but really, the benefit is to help the company grow
Right.
so that your equity, like let's say your one share is worth, whatever the number is, 50,000, and you can get that where it's worth 100,000.
Mm.
You know what I'm saying? And
Yeah.
then instead of having one or two shares, maybe you have 5 or 6 shares. Try to help build the company. So that's where I think, because for me at this point in my life, I mean, this is my masterpiece,
Yeah.
right? So this is going to be my after, uh, you know, all the stuff I've learned, all the contacts I have. This is it. This is
Yeah.
there won't really be anything after this. I mean,
Cool.
after that. So.
Well, we
Yeah.
appreciate everything you've done, building Visionary and giving all the agents opportunity. Um, if you're interested in Visionary, reach out to me. I'll connect you to Raj.
Absolutely. Yeah.
And would love to give us a shot.
Yeah. I
Um,
appreciate that.
and thank you for coming on the show. It's great catching up with you, and we'll do this again soon.
Look forward to it. Thanks for having me, Jan. I really
You
appreciate it.
got it.